Every coin has two sides. Every opinion has a counter opinion. Every price has a buyer and a seller. There is one fact, which is when Naren and Nilesh Shah, they both come on BroadView, it is time to sit back, listen, gauge and benefit from their wisdom. We asked them 4 important questions, and there are 4 relevant and powerful answers which could influence your portfolio. Gold has been the trade for last 3 years, and I asked both Naren and Nilesh, is that trade running out of steam or it is nowhere close to its expiry date? And answers both from Naren and Nilesh were surprisingly different.
We remain bullish on gold. From March 20, we have been investing in gold across our multi-asset allocation fund. From April 25, we started investing in silver, and those calls have really worked out well for us. At every level, when gold reached a particular limit of my portfolio, I kept on booking profit. वो टाइम पे बेवकूफ़ी लगती थी, यार भाव ऊपर भाग रहा है, आप बोलो गोल्ड में इन्वेस्ट करो और आप प्रॉफिट बुक कर रहे हो. But we always kept gold, silver as a percentage of our portfolio capped. These are emotional assets, not intrinsic value. I can't shift large portion of my fund into gold and silver. I have to follow certain discipline. We still believe gold and silver has a lot of way to go. The central banks of the world are buyers of gold. Their activity determines where gold prices will go. New supply is not emerging. So keep a watch on central banks and continue to invest in gold. But please put a cap as a percentage of your portfolio. Don't go beyond that.
Gold is an asset class. So gold is, I would say, an asset class which is an anti-dollar asset class. There are so many people who worry about dollar. Consequently, they go and invest in gold. Because gold plays a role in a world where people don't trust each other in geopolitics. I think gold is one of the best asset classes. And therefore, it argues for some allocation, not zero.
AI is the buzzword which everybody is using, but no one is finishing the sentence. I asked the same question to both Naren and Nilesh, and again, 2 very different answers. One is talking about a roadmap, other is referring to a risk.
AI will be similar. Not today, not tomorrow, but over next 3-4 years, AI hardware companies won't be trading at current market cap or valuation. But companies which will leverage AI to deliver cheaper, better, faster solution to their customer and who will deploy AI better than their peer group, they will create value.
The biggest challenge is it depends on how AI will affect India. Now, is AI going to lead to a situation where Indian IT services continues to grow, Indian GCCs continue to grow, or does it lead to a situation where these industries are going to have challenges? That is going to be very, very important.
One high conviction sector for next 5 years, and the guardrails were simple. No hedging, no multiple answers, just one high conviction bet. And surprisingly, what came back, again 2 set of very different answers. That just tells you that how both Naren and Nilesh are thinking.
एक deep tech will enter into Nifty 50. Now whether it is ed tech, consumer tech, fintech, space tech or something else, I don't know. I think there is a broader theme of electrification of India to reduce dependency on imported energy like oil and gas. Options are obviously first thermal because we have enough coal. We just need to figure out how to mine it. Technology wise, it's not difficult. We are mining coal for thousands of years. It's just the ecosystem around it. The rule of law is necessary to exploit mining in those areas. Second is solar, abundant solar. But already on a daytime, we are having zero power rate because we are producing more power than we can consume. So it will require battery storage solution or, pumped hydro or something else. Third is nuclear We have already created level 2 of fast breeder reactor, uranium to plutonium. Now we have to go to level 3, plutonium to thorium. And finally, there will be solar rooftop. India is mostly horizontal, not vertical. Today, there are 30 lakh houses which has reduced their electricity bill because they are self-sufficient in power. In fact, they are earning money. Tomorrow, they could be 3 crore also. So, electrification of India is likely to happen via thermal, solar rooftop and nuclear.
If we had to take one theme, I would say that we have to bet on exports as a theme, which is down. And we believe that, as you know, as we need to keep importing oil and various other things, we need to focus on exports as a theme, whether it is manufacturing and services.
The most important, but perhaps the most simple question: where are oil prices headed? I asked this question to both Naren and Nilesh, and the answers again were strikingly different. One gave me a number, other one came up with a warning.
Every oil producer now knows if I don't get oil now, 15 years down the line, that value of oil may be zero. They will all rush to get the oil out while there is demand, and that will keep the prices lower. So my call, 4-5 years down the line, oil will be below 50.
When have you seen oil go up 40%? So I would say the market has seen one of the largest rallies in oil ever, and oil is our principal input. So I would say that the risk of such an event has actually played out in the month of March.
One market, two minds, but no easy answers. What last 30 years of tracking financial markets has taught me that the winners are the one who may not have all the right answers, but the winners always ask the right question. And that is advantage BroadView for you. The right questions, the right perspective. A smart thinking always starts here.